Well, the bulls certainly seem to have lost their appetite. Look at the market now, because we are looking at a whole 100-point cut, actually 112 points in the Nifty. That's a cut of about 0.6%. And blame it on the usual suspects. I mean, HDFC Bank, because of the dividend factor, they've been putting pressure right from the morning. That pressure continues. Add in a Reliance now. Reliance was sluggish in the first half of the day, but now it's decisively lower, 1.5% lower on Reliance. ITC, L&T are some of the other heavyweights that have helped the bears' cause today, not quite the bull side. There we go, days low on Reliance. That explains some of the additional pressure that we are seeing. Okay, so good time to bring in Jay Bala and get a view on the technicals. Jay Bala, of course, is from cashthechaos.com. Good to have you on the show as always, Jay. If I recall, I mean, the last conversation that we had, you had retained your cautious stance. And I think the overall view was that perhaps what we could be witnessing is some sort of a buying exhaustion in the market. I don't know if you still retain that view, but looking at the market just around this mark, we're 400 points away from all-time highs. What's the sense first on the Nifty and the phenomenal rally that we've already seen on the Bank Nifty? That index already made an all-time high.
Yeah, thanks for having me on the show, Surbhi. The markets are doing pretty much as anticipated. And it's just the fact that it's overshot the upside. I anticipated about 18,134, but the markets have shot up past that closer to 18,400. But it doesn't change things. In fact, if we have a close below 18,315 today, the markets have flipped to the bearish side. But since the markets have been slightly stronger than my anticipation, I would also like to see the market take out 18,055. Even 18,190 will be a signal that the market is going to take out 18,055. But once we have this confirmation from the market, we are possibly looking at a waterfall decline for the markets. And I've been maintaining that in the medium term, the markets need to go below the June 2022 low. When it comes to the Bank Nifty, I need to slightly, take 10 seconds to explain the medium to long term. If you look at the bank index from the pandemic lows, we define trends as a non-overlapping move when it comes to the pullbacks. But right from the pandemic low, all the pullbacks have overlapped into the previous highs. So this is a very, very critical signal from coming from the banking index. Even if I force look at the banking index as a trend from the pandemic low, the banking index from the April 21 low is choppy and overlapping. That's a very, very bearish signal. And if the banking index were to close below 43,313, I think we have a bearish flip for the banking index too. And the reason why I explained the medium term, it's going to correct either the entire move from the pandemic low or the move from the April 21 low. So that's the reason why you need to have a picture of the medium term view in the banking index.
What a waterfall decline right now in the banking names, particularly the Nifty Bank. Just in the last few minutes, it's lost 200 points. It was holding up in the grain with a gain of about 100 points at one point of time. But just in the last, 10 minutes, it's down 200 points. Perhaps it's to do with the Fin Nifty expiry as well, because names like HDFC Bank, HDFC Limited are also selling off very sharply. The dividend on HDFC Bank was about 19 rupees, but the stock is down close to about 30 odd rupees. And even on HDFC Limited, I think the dividend was about 44 rupees, but the stock is down 65 rupees. Nigel?
No, that's right. I just wanted to point that out itself. The Nifty Financial Services Index, just take a look at that. That's broken that crucial mark of around 19,425. So it just about broke that mark. Not great news at all. And that's why we're seeing that the Nifty Bank as well has moved low. My guess is, we just pull up a couple of heavier names, whether it's Bajaj Finance or you could pull up HDFC, because that's not part of the Nifty Bank, but that could have moved a little bit lower as well. But let's continue our discussion with Jay. Hi, Jay. You're still sounding a little bit cautious. Since the Nifty Bank has moved to the low point of the day, what are the levels you're looking out there?
Yeah, it's important that, to assume that the banking index hasn't yet reversed as long as it stays above 42,500 on an intraday basis. As I said earlier, 43,313, close below that, and, a break below 42,500 will signal the banking index has reversed. Until that point, it's okay to, hold on with trailing stops. So those are the important levels for me on the banking index.
Right, Jess. Is there a pattern we can? I mean, so you go to, or you almost hit the all-time high. An index gets there, an important index like a big nifty bank, and then there is a pullback, and then you get a day like today. Anything? Because the index has been in an uptrend. For all practical purposes, there was a 10 paisa miss yesterday. Is it just nervousness? How would you read it, historically speaking? I mean, have you seen this kind of patterns before, and how does it play out? Just from that angle.
I think you're referring to the banking index. That's what missed the all-time high by 10 paisa. So, if you look at the banking index from the, lows of March or the lows of April of last year, as I said earlier, it's been chopping back and forth with all the pullbacks, touching the previous highs. This is an ending pattern or a corrective pattern. It's not a continuation pattern. So that's how we work out in technical analysis. And even if you slightly take a tangent to the U.S. equity markets, people are thinking the U.S. markets are resilient, but actually just 47% of the S&P 500 stocks are about 50-day moving average. And if you take out the big five, the S&P 495 is near its March lows. So, and the Dow Jones Transportation Index, which is pretty critical and a barometer of the economy, is also near the March lows, and the Russell is below close to the March lows. So, the external look for global markets on the surface looks positive, but there are cracks in the most of the equity markets. And added to that, I'm very bearish on copper. We have discussed copper a few times here in February, March, and as well as a couple of weeks ago. Copper is set for a 26% decline. I don't care if it's saying it's a recession or anything. The price action is telling me there is a 26% decline ahead. I posted a chart of this on my handle in February. The copper commodity is behaving exactly as I've anticipated.
Okay, 26% potential decline in copper. Jay, do stay on. We've got a few more, stocks and sectors to discuss, like FMCG, capital goods. For now, we need to slip into a very short break.
कर लेता हूं।
पैसों की कमी से अपॉर्चुनिटी मिस हो गई? किराना तो नहीं, पर स्टॉक्स पे बाय नाउ एंड पे लेटर विद ICICI Direct MTF. Investments in securities market are subject to market risks. Read all the related documents carefully before investing. It's time to break free. Break away from the routine to the greens and get lost in the world within. To steer through, to stop, start again, go forth and just let it all go. With JK Tyre's Ranger 80 for the ones who are wild at heart. JK Tyre, total control.
We don't just create new standards, we create new priorities for the Indian car buyer. In fact, we make the whole world of India's mobility new forever.
Okay, welcome back. You with us here on Closing Bell. Jay, Bala, of course, is still with us. This, just counting down to the close 5 minutes, as I said. Jay, we discussed some of the indices here, but since if you referred to some of the global averages, S&P just the large tech names holding up things and transports index there. What about the dollar and US yields, etc.? Are they they seem pretty well behaved for now, but you believe they're close to the bottom rather than the top?
That's right. The 10-year US 10-year yields and the dollar index is in a very similar kind of structure. They are signaling possibly a bottom, or there is one more low. That's the unclear picture. That's confirmation which hasn't come from either the US 10-year yields or the dollar index. If the dollar index were to take out 103.36, the spot dollar index, then it confirms a bottom is in place and a sizable rally. Maybe even record highs, but we can take it as a counter trend rally to 100, 109, 110. So even that is signaling that. But the yields is a surprising part. I don't know what's going to trigger higher yields, whether it's going to be higher inflation or the Fed is going to see the inflation as being sticky. I don't know what reason that's going to trigger, or it could even be the debt ceiling talks failing. Anything could trigger. But if the yields were to cross 363. 364 bips. I think the next leg up for the US 10-year yields is underway, and it's going to be somewhere close to, slightly less than the 500 bips.
Okay, Jay, so quick final question. I was just looking at US indices, whether it's the Russell 2000 or the S&P 500. It's interesting. We are talking about breaking out of a 18-month consolidation, whereas some of these US indices actually have done nothing but consolidate. If you look at a slightly longer chart, I think you look at the Russell 2000 very carefully, if I'm not mistaken, that or whether it's the S&P 500. What is the critical level that you're tracking on any of these indices to offer further clues?
Yeah, see, since I trade the S&P futures, the 4063 on the S&P futures is very critical for me. If the S&P futures were to go below 4063, it marks start of the next leg of the decline. The consolidation would be over for me. And likewise, the transportation index is forming a head and shoulders pattern, which is a continuation pattern at the moment. If it were to break below the recent low that existed a couple of weeks ago, that will also signal the next leg down is over, and the consolidation has been a bearish consolidation. And the move has been very choppy for a lot of people who don't understand Elliott waves. Any move that's choppy and not which is overlapping is a correction, and it's all classic corrective move for all the US indices from the October low. None of it is trending up.
All right, Jay, thank you very much. We'll leave it there for now, but we'll have you back soon again as we continue to track markets closely. We're going to end down